G'day everyone, let's have a look at Bitcoin and see what it's been up to. So as we talked about several weeks ago when we were up at 31K that we were looking for a breakdown, and it's done that. And we are now at a very, very, very critical support level. And there are multiple charts telling you that this is a must hold zone. And I'm going to show you some of those charts today and show you what to look for to know where we're going. And then if we do break this zone, where we're likely to go after that. All right, so let's dive in and have a look. So looking at just your basic support resistance, okay? And you just got to remember support resistance is all about just a psychological flip, all right? For whatever reason, people were selling here at this 25K zone. Sellers. Now, sellers are exhausted. We have no more sellers left. What does it do? It pumps up. Then what you're always looking for is that flip. Those sellers, you want to become buyers, which they did. Okay, so if they were buyers here, we need them to be buyers here again right now. There's two things I'm looking at that are catching my eye straight away. Notice the first time, the minute it touched, pumped. Notice this time, minute we touch, what are we actually doing? We're hovering around down here. Okay, this is not normally a good sign because what it's actually doing is it's eating up the supply. All right, so there's only so many buyers down here, and the more that we hit it, the more that supply gets eaten up, which means then we exhaust our buyers and we run out of buyers, just like we ran out of sellers here. Okay, so that's something I'm looking at that's already a bit of a bad sign. You want it to come down, punch straight off. If it came down again, people couldn't wait to buy here at 25K last time. Why is it not pumping again the minute it touched here again? Okay, the fact that it's been hanging here for 4 weeks is a bit of a telltale. But anyway, that's what one little thing to look at. On top of that, like I talked about when it was happening, we've got a nice higher high, higher low, higher high, higher low, higher high, higher low, equal high. So we've changed our market structure. We went from an uptrend to a sideways trend. We are now in a sideways trend. All right, two equal highs, two equal lows now. Sideways means consolidation and you need to wait for a move. It either means that it's accumulation before we break up or it's distribution before we break down. My belief is that it's distribution, which is what I'm going to explain to you later on in this video. All right, like I talked about, that this was distribution up here. What's happened here is just a mini version of what's happening up here as well. I'll explain further when we get there. All right, so see how here this was trending up, and then what did you get? Equal high, we broke below. We're going up, equal high. If we break below, then it's just the same thing that's here. It's gone from an uptrend to consolidation to then downtrend. If we do break this support, I know that there are a lot of eyes down on this zone down here because of the CME gap. Okay, we've got this beautiful big CME gap right there that everyone's calling to get filled. Okay, also that is where the divergence and the weakening trend started to happen from as well. So we have had a weakening trend while we've been up from that zone there. If you remember why that CME was caused, it was from the banking crisis. Okay, and when this was all happening, I was going on about the fact that it's a narrative you're being fed. It's a narrative. It's actually just being pumped up. All right, so as you can see, this whole thing came up. It's now gone sideways. And if we were to come down, what that's telling you is that that whole banking crisis thing has been negated. All right, so would be very interesting if we break below there, we do change our market structure. All right, so what was resistance becomes support. We would then have breaking below a pivot, we'd be breaking down. Okay, at the moment we do have lower low, lower high, lower low, lower high, lower low. Okay, this trend is completely bearish on the daily right now until we get above this 28.5 kind of zone. Okay, that 28.5 is the key zone to break. I will also be looking at the 26.5 as well. 26.5 is key. I'll show you in the 4 hour, which it's rejecting from right now because that is even lower low, lower high, lower go. So that pivot high, as you can see, is still being rejected here. It's come up, liquidity grab some of those stops that were there and now selling off a bit. But if we can come up here and hover back up, we would be changing our market structure but I'll be ultimately looking for it to get above that 28.5 as well. All right, now a couple of key charts I wanted to show you. So the Tether dominance chart. Okay. This one here, as I've been talking about for a long time, has been in this symmetrical triangle. This is a consolidation pattern. Symmetrical triangles happen in either a wave B or a wave 4. After that, you get an explosive wave 5 move or an explosive C wave move. Okay, this is the zone that I've circled here that I've been talking about for a while. If we get above that zone, which you can see we rejected right now, then this thing turns bullish and we go up for an explosive move. Right now, it's broken out of the triangle. It's testing the triangle as support. If we can come up here and punch through, then you'd be looking for that break of 25K as well. So this is Dow theory. Okay, Dow theory believed that indices should confirm. He had the transportation average and the industrial average. They should both be saying the same thing. If you don't know what I mean, I'll show you a quick example now. Okay, this chart on the left is your Dow Jones Industrial. This chart on the right is your Dow Jones Transportation. So what he believed is that these should be going in unison. So if this is going up, this should be going up. As you can see here, this is right before the COVID drop, before we dropped 30–40% in a few weeks. You can see that the Dow Jones Industrial made a new high. Okay, high, low, higher, low, higher. But the transportation average actually made a new low, made a lower low, lower high, and then changes market structure there. Okay, that is divergence. They are not saying the same thing. So we're just taking that same process that Dow theory invented 100 years ago, the guy that invented technical analysis, the grandfather. If you're going to listen to anybody, you might as well listen to the dude that invented the stuff, taking that same principle and applying it to crypto and Bitcoin. Okay, so if we're looking at Bitcoin, we're looking at the tether dominance as well. Because if you think about it, if people are selling their Bitcoin and their crypto, where are they parking it? They're putting it in the US dollar in tether or USDC dominance as well. Okay, let's have a look at USDC dominance as well and check that one out. So this one, and I talked about this on a previous video, that money's actually been flowing out of the USDC because of all the fear. But if you go back and watch my video, and that link will be in the description. But what we had was bullish divergence coming into this major support. Major resistance became major support. Into there, we had major bullish divergence. So from there to there to there. Okay, weakening trend, momentum was weakening, come into that. It is now punched off there and breaking up into a higher high, higher low, higher high, high low, and now we've broken up above that resistance again. Okay, so USDC dominance is in bullish market structure right now. What I'm ultimately looking for it to do is get back above that pivot there as well. Okay, but at the moment, it is on bullish market structure, which would align with also Bitcoin still going down as well. Okay, so far we've got the two charts that should be bullish to send Bitcoin down are. Okay, so again, going off what we saw in Bitcoin, the fact that it hasn't punched straight off, bad sign. Both of these ones are showing bullish momentum, bad sign as well. Another important chart I like to look at as well, and this was one that helped me call the top when we topped out at 69K, was Bitcoin to the S&P 500. Okay, and the one thing you can notice is, can you see on this chart here, again, back to Dow theory, indices must confirm, how we actually had a lower high on this one. What did Bitcoin do? Bitcoin actually made a new high. It came up to 69K. So why did this chart make a new low when the Bitcoin made a new high? Okay, that is divergence. Because again, if Bitcoin is in a bull market, it should very clearly outperform the S&P 500. Why? Because Bitcoin is $500 billion market cap, $500 billion. The market cap of the stock market, SP500, is around $40 trillion. Okay, so nearly 100 times larger than the size of Bitcoin. So you can imagine it's a lot easier to multiply Bitcoin than it is the S&P 500. Hence, if it's in a bull market, it should be outperforming. So the fact that a $40 trillion asset was outperforming Bitcoin here shows that it wasn't a bull market, that it was actually weakening. That same thing, remember at the beginning of the video, I talked about the fact that we just got the same thing, redistribution here. That same thing has happened on this top up here at 30K. Okay, we've come up to our support, major support, that's now been tested as resistance. But the main thing stood out is that same divergence that we had at the top at 69K, we had here as well. And again, what did Bitcoin do here? Bitcoin made a new high. Okay, Bitcoin made a new high, just like Bitcoin made a new high here. New high here, new high here, but on our Bitcoin to SP500, new low divergence. That was another way of knowing that the top was in at 31K, which is when I did my video several weeks ago when we were at 31K, saying that we're about 30% drop incoming. Again, if you want to see that video, link is in the description. Okay, so coming down here, same thing right now. That is on major support as well. Okay, if we break that, we have a lower low, lower high, we change our market structure. If you unpack the volume, it is already kind of telling you what's probably likely to happen before it happens. Okay, you can see a lot of sell pressure has come in on that move. All right, so we've come down, and volume is already matching down towards these levels here, which would match with that 20K zone as well. All right, so we're kind of at a must hold zone here. I need to see, for any bullish move, we need to see this thing start to move up and then Bitcoin to outperform the SP500. What people don't realize is that, Bitcoin has only ever existed in a bull market. And that's what I was talking about with my whole thing, is that, this is actually going to be Bitcoin's first bear market. You guys are crazy. Bitcoin's dropped 80%. Yeah, it has. But those times when that happened were just in traditional market corrections. It was not a traditional market bear market. But this ratio that I'm showing you right now is the NASDAQ against the SP500. What it shows you is a risk-on environment against a risk-off environment. Because if the NASDAQ is outperforming the SP500, that's showing you that technology and growth stocks are outperforming. As you can see here, from July 02, this thing has been an uptrend. So from 02, you want it to be in your NASDAQ and your growth stocks and things like that. We have now topped out, and we have triple topped and started to sell off. Okay. Last time we were up at this ratio was back here. That date there was the very top of the tech bubble when equities were extremely expensive. We are at that exact same level right now. Okay. The exact same level we were when equities were that expensive is where we are right now. On top of that, if you know anything about the Sp500 ratio, it's the second most expensive in history. It's more expensive than the Great Depression right now. It is under the tech bubble, but not by much. Okay, tech bubble was 40 something. When we got up to here, we were around 35. Okay, the Great Depression, we were 30. We are still above the Great Depression equity prices right now. Okay, so equities are extremely expensive going off historical values. Like I talked about, that's showing you risk on. At the moment, we're hitting this wall of resistance. If we reject here and start to pull away, then, you'd be looking to bam, come back to that kind of trend line support. That's kind of best case scenario. Worst case would be that whole cycle is complete and you're looking for a 1/3 to 2/3 correction of that move. Okay, again, this stems from Dow theory, is that for every push, you'll get a 1/3 to 2/3 correction, 382 to 618. All right, so around that kind of zone there. Me personally, that 618 has a lot of confluency that I'd definitely be looking at. Big round number of 2. What I want to show you now is the SP500 and where these nasty bear markets of Bitcoin have happened before. All right, so let's look at these nasty bear markets we've had. So the first one happened in June 2011. It was this correction right there. Okay, correction in the stock market. Kept going up. It was a lower high. All right, Bitcoin went from $38 down to $2. Massive drop. Next bear market was here in December 2013 to 2015. So it was this. SP500 went sideways. Just a correction. Next one was here. January 2018 to here. So again, sideways to a little bit of a drop, correction. Then we had this nasty one here, which was your COVID drop. Okay. Then you can see what we've had now is this. Okay. So again, what do we have that's different here? Something you can see is that why did Bitcoin top out really around that April 2021, yet the stock market didn't double top, it kept going up. Okay, so SP500 was outperforming Bitcoin for another 6 months after that was happening. All right, showing that money was getting out of your risk on assets before the S&P 500. Okay, a little bit worrying. The other thing you can notice with this graph here is higher high, higher low, higher high, higher low, higher high, higher low, higher high, equal high for the first time in Bitcoin's history. And all it's actually done is broken below its neckline and testing it as resistance right now. All right, that is a crucial level that it needs to get above. Until then, this thing is actually in a bearish downtrend. There's no debating that. Anyone that's debating that doesn't understand technical analysis. Okay, so this is an unbiased technical opinion just off what the charts are saying. So anyone saying we're going on the moon, things like that, you cannot even mention those words until you get above the 30, this zone that it's broken here. If we get above there, then you can have some kind of bullish talk. Until then, all we have is a complete downtrend on the larger scale. The primary trend is 100% down right now until we get more data to tell us otherwise. Okay, so if anyone on YouTube's out there giving you moon boy talks and things like that, show them that graph, show them their divergence, show them how it happened at the top at 69K and how it's happened again here now, and ask them why. Why did a $40 trillion asset outperform a $500 billion asset during those times? And you're probably all thinking, oh, but the Bitcoin ETF, da-da-da. If you're aware of the news, it's old news. This is what they do to retailers. They feed you a narrative. They tell you what you want to hear so that you hold, okay, or you keep buying, okay? Because if all I see over social media is this ETF, everyone's already aware of it. Everyone's already bought and waiting for their bags to go to the moon. Who's buying? If everyone's already bought waiting for this ETF, tell me who's buying, who's left to go? No one. Again, that's Dow theory. The market discounts everything. All news, even possible news, is already put into the market. That is why it has gone from 15K up to 30K. It's doubled. Okay, do you really think these Bitcoin ETFs and stuff, they weren't aware, the big money wasn't aware of it back here? They knew that these things were probably going to happen. They load their bags, they bring it up here, and then they can distribute to that news to you retailers now finding it out. All right, you've just got to understand that whenever you know something, it's already priced in. Okay, unless you actually know someone on the in, it's not new news. Okay, really important you understand that. Is that how many times have you seen news come out and it actually has had a positive effect? It's always been negative. All right, buy the rumor, sell the news. It's why it's a famous saying. But yeah, anyway, guys, that's just something to take notice of, is that, yeah, we're at a crucial zone now. We must hold this 25K zone. If we don't, we're probably going to head down that CME gap, which is really then a must hold zone, because if we don't hold there, we're making new lows, in my opinion, and we head down below 10K. So that's always been my target from when I went bearish on November 14th, 2021. Back above 65K. And because back then I knew it wasn't just a normal bear market, it wasn't just a correction, it was actually the beginning of an actual first time bear market. We are correcting its whole existence, not just a prior halving like every other time. Okay, if you want more in-depth analysis, go back and watch my video of how I actually called the top on November 14th. You can see me live in action doing that. And then also what I believe is happening right now. And back then, when we were back here, I talked about the fact that what they're going to do is drive it back here and redistribute. They're doing it right now. They're redistributing, and they're doing it on this ETF narrative because no one's thinking that they're actually maybe selling out right now because everyone's so bullish on this Blackrock ETF. All right, so just be careful. Get rid of all news, all bias, and just follow the charts. They do not lie. They do not have emotional attachment. All right, take care, everyone. Please like and subscribe. I'll see you at the next one. Take care, everyone.